Is this
Sure.
inflation like the inflation of Volcker or the inflation of the 70s?
Well, this is like that TV show, the 70s show on Fast Forward. The 70s was a long decade that was basically called the Great Inflation. I think it basically started in 1965 and lasted until the early 1980s. This, I think, is really going to turn out to be more like what happened after the soldiers came back from World War II. And we had this huge demand for consumer durable goods. And Ford was making bombers, not cars, and it took them a couple of years to retool. I think a lot of this inflation has been consumer durable goods inflation, but it's different. I mean, it's not different. We really also have an energy component to it, and I think that could soon moderate. I think this is not going to be a great inflation of the 1970s. I think we have seen the peak. I think it is going to moderate, and I think we can all hopefully look forward to that.
Well, Ed, what do you think of the Adam Posen idea that we are going to have to tolerate a 3% inflation rate for a longer period of time, and the Fed has to essentially be more okay with that? How is that sort of shaping the view among academics in terms of what's acceptable versus what they're saying, which is still 2%?
Yeah, I've been thinking for a while that there's just no way they're going to get inflation down to 2% anytime soon, which means I don't think it's going to happen this year. I don't think it's going to happen next year, and maybe even not the year after that. The problem is, as we all know, rent inflation, and rent inflation is sticky, and we know that a lot of people are seeing the rents go up quite a bit. And they only show in the CPI, it only shows the total pool of rents. It doesn't show what's happening on the margin. So right now, rents are, depending on which measure you're using, basically going up 4 or 5% overall. But on the margin, they're going up by 10 to 20%. And so that's going to be reflected over time. So I think they are going to have to change their tune here and conclude that maybe 3% is what inflation target they want to reach, or they'll do an inflation target excluding rent.
Ed, let's talk about this equity market and finish there.
Yeah.
I quoted a piece from you a little bit earlier this week on what you had to say about the US dollar. It's something we haven't talked about much this morning, but something we've talked about a lot this week. The dollar's a whole lot stronger. What do you think that means for corporate profits in America? What are we underestimating, and what does it mean for where you want to be in this equity market, and ultimately what you want to avoid?
Well, by the way, first and foremost, I think a strong dollar is equivalent to at least a 50 basis point rate hike, and quantitative tightening is equivalent to at least that as well. So I think that actually lowers the terminal rate on the Fed funds rate. For corporate profits, we've already seen companies like Microsoft announce that the strong dollar is going to take something away from their profitability. And that'll happen to most of the multinational companies that get a significant part of their revenues from overseas.